What's going on, guys? Happy Friday. We just received jobs data for August and it's not looking good. We saw yet another miss. We saw 22,000 jobs added in August where the expectation was 75,000. And in previous reads, we've had massive revisions. What was 74,000 jobs added in the prior month turned into a revision for the previous 2 months being only a 33,000 increase. That is a massive revision. 291,000 increase turning into only 33,000 increase as unemployment is slowly ticking up. And as you can assume, this increased the probability of rate cuts. Not only a 25 basis point cut, but now a 50 basis point cut is on the table, which we have not seen at least for an expectation in September. Leaving rates current isn't even expected at all at this point. And we have an 88% chance of a 25 basis point cut, an 11, nearly 12% chance of a 50 basis point cut. My assumption would be we're going to get a 25 basis point cut. We do have some things coming up before the Fed meeting, however. And this could slightly change the end result from a 25 basis point cut to a 50 basis point cut if we see these things come down, and these things are PPI and CPI. They have been ticking up lately, but the Fed's dual mandate is not only inflation, but employment. We have seen PPI increase dramatically to 3.3%. If our September 10 read, which covers August, comes in under 3.3%, there might be a chance of a 50 basis point cut. Even if it comes down to 3.1, 3.2, whatever it is, that's still well above the Fed's 2% goal. But I think because of this poor jobs data, they're going to let that slide. Their 2% goal is probably turning into more of a back burner afterthought. And the focus is jobs now. Also, CPI comes out before the Fed meeting, and this is a 2.7%, so less than PPI, but still far from the Fed's 2% target. Now, PCE, which is the Fed's preferred gauge of inflation, this comes out after the next Fed meeting. This is going to be on September 26, and it has been coming up lately, but much closer to the 2% goal than PPI and CPI. This is a 2.6% read that we got last time. It has been coming up steadily. If we can see this tick down into the low 2s, that'll clear the way for more cuts to end the year. And this news, combined with possibly other factors, has caused Bitcoin to pull back a bit. Normally when it's more likely for Fed cuts, risk on assets go up, such as Bitcoin. Remember, September tends to be a pretty rough month, especially when we're talking about Bitcoin. This may be the last buying opportunity this cycle before we get our peak. And I showed you this the other day, but look at last cycle. September was a rough month for Bitcoin. Probably a lot of fear, a lot of worry. Oh no, Bitcoin has topped out here. But then what happened? It recovered. It went to a new all-time high to end the cycle. Just from September to November is a massive difference. I do see this September as a buying opportunity for Bitcoin before we end the cycle. But risk is definitely elevated from buying our crypto winter lows at $15,000 Bitcoin. And even last cycle, or even the previous cycle before that, on a peak year, September 2017, we saw a pretty big drop, down to $3,000. And then Bitcoin ended that cycle right around December at about $20,000. September was a bad month. September was a buying opportunity. And September, during the 2012 cycle at the 2013 peak, September saw a flash crash, down to $85. And then it ended that cycle at about $1,100 in November. September throughout Bitcoin's history, especially during a peak year, which we are in, has always been a buying opportunity, and I do think this is no different. Now, one thing I'm watching on Bitcoin is we broke out of this falling wedge. I do think we are starting our uptrend despite this kind of a mixed bag of a day. I think we're going to test our 50 MA at the $115,000 level. If we can break that, I think we are going to continue to fill out this pattern that has not been invalidated yet. We broke out of this falling wedge, which tends to be a bullish pattern, tends to get a good reaction out of it. And I do personally think Bitcoin is going higher. Perhaps we see a bit of a rough September. Maybe we come back down and retest this as support, this $108,000 area. Also setting a higher low as long as we don't break under these lows here. One thing we are going to continue to see for Bitcoin is more treasury companies buying more Bitcoin. This isn't going to stop. It's not going to stop during the bear market. It might slow down a bit. But the companies announcing Bitcoin treasuries, especially during the bear market, especially during any bad times, are going to benefit the best versus those buying tops. And we do have an announcement of Asia's first dedicated Bitcoin treasury fund, this Sora Ventures. They have plans to buy $1 billion worth of Bitcoin in the next 6 months. Following Bitcoin's cycle, they will be buying during crypto winter if it follows through. And in my eyes, that is a great opportunity for a company like this to load up. Hopefully they don't go in with too much leverage. If Bitcoin is in a bad downtrend, these companies are going to face some rough times buying into Bitcoin and not seeing the instant gains that we have been seeing during this bull market, where they buy Bitcoin and then it goes up, they look like geniuses. Instead, during crypto winter, they're going to be buying Bitcoin, it's going to keep going down, and they're going to be losing value on their Bitcoin holdings. Those that go in with too much leverage might be part of the major focus on this crypto winter, whereas last crypto winter was more about the exchanges that went in too heavy, went in with leverage. Last cycle was a whole mess with FTX and everything else. But I do think this cycle will be kind of focused on these Bitcoin treasury companies, and they just need to have a plan if Bitcoin does see some major pullbacks, a typical crypto winter. Hopefully they can have the ability to be buying during those times. But anyways, this is a pretty big deal. This is the first company in Asia to do so, and this might open the floodgates for more to follow. So far, the focus has been in US and Europe. This new fund signals Asia's emergence as a serious player in the market. And we talked about this just the other day, that these Bitcoin treasuries, when you get all of the Bitcoin treasury companies together, they hold over 1 million Bitcoin. And they just reached over 1 million with just the top 100. The other day, I said, probably tomorrow, that they'll reach over 1 million Bitcoin held, just talking about the top 100 companies, not having to include all of them. And here we are. The top 100 companies now hold 1,002,000 Bitcoin. These entities holding Bitcoin is only going to grow over time. The Bitcoin locked up in treasuries is only going to grow over time. But how are you guys feeling about this job data? Do you think we're going to get a 50 basis point cut in the next Fed meeting, or 25 basis point? I think that difference will heavily rely on PPI, CPI. Regardless of those, I think we are getting a cut, as does the market expect. And we should see some cuts to end this year and see Bitcoin follow out its cycle, peak somewhere around November or December. But what say you guys? Is Bitcoin going to follow its cycle, or is it going to continue on into 2026 to new all-time highs? Or do we see another fantastic buying opportunity just like we saw in 2022? Following the cycle, we should see a great opportunity to load up on Bitcoin in 2026 and throughout 2027. The next halving is 2028. The peak year should be 2029, just based on following Bitcoin's cycle that it has been in since its inception. But thanks again, as always, for watching, guys. I will see you on the next one. Have a good weekend.